So, hello everyone. Today we are going to discuss another penny stock, which is Bhandari Hosiery Export Limited. If we look at the price, so the pricing is at 7.80 rupees on 3rd May. If we look at the company, so the company is in the business of textile and garment manufacturing. It is based in Ludhiana, Punjab. Uh, Company has various portfolios. Company used to export goods to Germany, USA, Dubai, UK. uh, However, export sales are less than 10%, as we have seen that it is around 6%. On the other hand, domestic sales is 94%. So if we look at the right issue, so company has issued a right share of around 8 crore for capex purpose. And on the other hand, if we look at company is proposing for another capex for which it is going to raise another 48 crore rupees, and to which is being used for capex as well as reduction of the existing secure term debts. If we look at the promoters, so promoters are having the confidence in the company, and promoters have given unsecured loan of 9 crores in FY23. And if we look at the other factors, so the company is having around market cap of 127 crore rupees. P is around 20, and if we look at ROC is around 10%. If we look at the other factors like the pricing, so the price of company is ranging between 12 to 8 rupees, currently 8 to 7 rupees. So if we look at the various factors of company, so if we look at the quarterly results, so the quarterly results are because the business is seasonal business. So in March, the turnover is more than compared with the other quarters March. So if we look at the turnover of June to December 23, so the turnover is around 60 crore rupees, and the net profit of 1.77, uh, 1.77, and EPS of 0.11. If we look at trailing 12 months revenue, so it is revenue rate is around 288 crore rupees, which shows that a growth rate of on an average 8% year on year basis, and 3% 1% on three past 3 years, and 12% on 10 years basis. And the EPS is around 0.40 rupees. If we look at various factors like equity capital, so the equity capital are 15 crore rupees in September 23, which can go to which can increase if we look at which has been increased due to right shares, and that we will get to see in March 24 balance sheet. If we look at the reserves, so reserves are 76 crores and borrowings are 120 crore rupees. In borrowings, if we look at the long term borrowings, so the long term borrowings are around 37 crores, which company want to reduce by issuing 48 crores of right shares, and other ways through which they want to reduce the long term borrowings and secure debt. If we look at the short term borrowings, so the short term borrowings hit its peak at 83 crore rupees. It shows that the company is heavily invested in capacity increasing, and company is good amount of short-term cash credit, I would say, that is required to refinance or finance the business, and that is the reason why the short-term borrowings has been peaked at its highest in September 23 quarter. If we look at the fixed assets, so the fixed assets are stagnant, and it looks around 50 crores in last 4 or 5 years. On the other hand, if we look at the cash equivalent, so the company have cash equivalents of 3 crore rupees, which would be a good number with such a with such a penny stock. That would be a good number if you look at the cash flow. So the cash from operating activity is the must thing which we should have to see in every penny stock, because the numbers may seem superficial, but the actual whether they are actually generating the cash flow or not, that is the most important thing we have to see in every company. And in penny stock, that would be a red flag. So we have to see that if we look at the cash from operating activity, so they are having around 12 crores surplus, which would be good. If we look at the cash from investing activity, they have increased their assets, which shows obviously their commitment towards capacity increasement. And then if we look at the repayment of borrowings, the company is consistently repaying its borrowings, so that would be that would giving a confidence of the solvency the company often used to maintain. So if we look at the promoters holding, so promoters have increased their holding from 25%, 24.95% to 27.60%. That is because of the right share they have availed, and they have exercised the right share. So the share stake in the company is being increased to 27.63. Also, it is very minimal, but the FII, some few penny FII has invested in the stock, and the percentage of them is 0.01%. That is insignificant, but if a company like this, we should consider, if we should see it as a penny stock, but the fundamentals are good. If we look at other factors, like the company has given zero point zero 0.01 paisa of dividend consistently from year to year basis, that would be something which we have to see, like a penny stock which is pricing below 10 rupees and consistently paying dividend of 1 paisa. So it would be a greater thing to understand. On the other hand, this is not a financial advice, I am not giving any portfolio management services relating to stocks and shares. So ask with your financial advisor before investing into stock. I hope this video you find this video as informative. Thanks for watching.